Welcome to the deep dive. Today we're jumping into something maybe a bit under the radar, but it's huge. Wealth management software.
Yeah, it doesn't always grab headlines, does it? But it's quietly revolutionizing how money's managed worldwide.
Exactly. And the growth is, well, pretty astonishing. So our mission today is simple. Unpack the numbers, the trends, and give you a real shortcut to understanding what's driving this massive shift.
And it's important to know where this info comes from.
Oh, absolutely. All the data we're looking at today is from cognitive market research, so solid stuff.
Good. Foundation matters.
Right. So let's start with the big picture, the global view, because this really sets the scene. Back in 2021, the whole market, about $3.5 billion.
Okay, not small, but wait for it.
Exactly. Hold on, because it's projected to jump to nearly $5.8 billion by 2025.
Almost double in just 4 years.
And then it really takes off, surging to over $16 billion by 2033.
Yeah.
That's a compound annual growth rate, the CAGR, of almost 13.5%.
That kind of acceleration, it's not just growth, it's transformation. We're talking about a market basically quadrupling in, 12 years?
Incredible.
It tells you financial institutions, big and small, are making huge bets on digital. They have to, really, to handle complexity, meet client demands, scale up.
Old methods just won't cut it anymore.
Not at this scale, no.
Okay, so that global number is definitely a headline.
Yeah.
Let's dig into the regions, because I think that's where the really interesting stories are.
Absolutely. The global trend is one thing, but why it's happening and where it's happening fastest,
Yeah.
that's in the regional details.
So where do we start? Which region is really pushing that growth?
Well, the clear standout, the fastest growing engine, is Asia Pacific. No question.
Okay.
Back in 2021, APAC was around, say, $900 million. It's expected to hit over $1.5 billion by 2025.
So significant jump already.
And then reach a really remarkable $4.5 billion plus by 2033. That's the highest regional CAGR we see in the data, over 14.4%.
Over 14%. What's fueling that kind of fire in APAC?
Well, it's often this leapfrogging phenomenon we see.
Leapfrogging.
Yeah, many economies are kind of bypassing the older, clunkier financial systems and jumping straight to the latest digital solutions. Plus, you've got a rapidly growing middle class, phones everywhere, and just a huge demand for modern financial tools.
Makes sense. So within APAC, any specific countries leading that charge?
Oh, definitely. China's obviously a giant. It's set to go from under $300 million to over $1.5 billion by 2033. That's a CAGR of like 14.6%.
Huge market.
But the absolute standout in terms of growth rate, India.
Okay.
Yeah, highest overall CAGR in the entire data set, over 15.4%. It's going from about $120 million in 2021 to over $670 million by 2033.
Wow, that's some serious momentum.
It really is. And you also see Singapore performing very strongly, nearly 15% CAGR. Southeast Asia as a block is also right up there, around 15%.
So it's pretty widespread across the region.
It is. Japan's growing solidly, too. South Korea, Australia, they're all part of this bigger regional boom. Taiwan, rest of APAC, all showing strong numbers.
Okay, so APAC is the speedster. Let's pivot now to the current heavyweight champion, the biggest market right now, North America.
Right. North America still holds the title for the largest market share. In 2021, it was already close to $1.4 billion.
Okay.
Projected to reach almost $2.3 billion by 2025, and then grow to over $6 billion by 2033. The CGR there is a solid 13%.
So still very strong growth, even if APAC is growing slightly faster percentage-wise?
Exactly. It's a more mature market, so the growth is built on a bigger base.
Yeah.
A lot of the drive here is about upgrading existing digital tools, integrating AI for better personalization.
Right. Less building from zero, more enhancing what's there.
Precisely.
And if we look inside North America, the U.S. is clearly the dominant force.
Oh, absolutely. The U.S. market alone was $1.1 billion in 2021, heading towards $4.7 billion by 2033. That's a CGR of about 12.9%.
Still massive. And Canada?
Canada's showing really strong growth, too, actually slightly higher CGR than the U.S., nearly 13.7%, going from about $180 million to over $830 million.
Interesting. And Mexico?
Mexico's keeping pace, consistent growth, about $116 million up to over $500 million, around 13.2% CAGR. So yeah, even these established markets are clearly still investing heavily.
Okay, let's cross the pond to Europe. What's the story there?
Europe presents, well, another flavor of growth. It's steady, it's significant. The market was around $680 million back in 2021.
Okay.
Expected to cross the $1.1 billion mark in 2025, and then climb to nearly $3 billion by 2033. That's a CAGR just shy of 13%, so very much in line with North America.
And what's driving it in Europe? Similar factors.
Similar, but maybe with a slightly different emphasis. You have very established financial centers, of course.
Hmm.
A lot of the push is towards enhancing compliance. Regulations are complex there,
Yeah.
and needing platforms that can handle wealth across borders seamlessly.
Ah, the cross-border aspect. Makes sense. Any particular countries standing out in Europe?
Germany looks particularly strong. Its CAGR is almost 13.7%, growing from about $137 million to over $630 million.
Quite robust. How about the UK?
The UK is right there, too. About $92 million in 2021, projected to hit over $412 million. That's a CAGR of around 13.3%.
Still very healthy growth.
Definitely. And you see similar consistent growth across the board. France, Italy, Russia, Spain.
Even the Nordics.
Yeah.
Sweden, Denmark.
Yep, Sweden, Denmark shows solid 2G. Switzerland, Luxembourg, two key financial hubs. And the rest of Europe collectively adds a significant chunk as well. It's widespread adoption.
Okay, moving south now. South America, what's happening there?
South America is really emerging as a potential powerhouse in this area. It's showing very strong growth.
Okay.
The region started at about $245 million in 2021, and it's projected to grow to over $1.1 billion by 2033. That gives it a TGR of nearly 13.8%.
That's higher than North America and Europe.
It is. It reflects maybe some of that leapfrogging we talked about in APAC,
Yeah.
plus rising financial inclusion, growing middle class, and an appetite for digital solutions to overcome maybe older infrastructure hurdles.
Interesting. And who leads the way in South America?
Right.
Brazil.
Brazil is the biggest market, yeah. Set to grow from just over $100 million to nearly $470 million.
Okay.
But look at Argentina. Its CAGR is particularly high, over 14.4%.
Wow, similar to some of the fastest growers in APAC.
Exactly. Really strong acceleration there. Colombia, Peru, Chile, they're all contributing significantly too. It's a continent that's clearly digitizing its wealth management fast.
Fascinating. Okay, let's shift to the Middle East.
Middle East shows what I'd call strategic growth. Market value was around $190 million in 2021, projected to reach nearly $884 million by 2033.
And the CAGR.
Almost 13.7%. Very strong. A lot of this seems tied into broader economic diversification strategies in the region, investing heavily in finance and tech beyond traditional industries.
Makes sense. Any leaders within the Middle East?
Saudi Arabia is definitely leading the charge, growing from about $54 million to over $254 million.
Significant. And the UAE?
UAE is also a major player. From around $32 million heading towards $163 million, Turkey, Egypt, Qatar, all showing substantial growth as well.
Okay, one more major region to cover, Africa.
Right, Africa. Now, the starting base is smaller here, but the potential is immense. The market grows from about $88 million in 2021 to over $410 million by 2033.
And the growth rate?
The CAGR is solid, nearly 12.9%, so slightly lower than some other regions, but remember the starting point. The key drivers here are often, a very young population, rapidly increasing mobile phone use, and a real entrepreneurial drive.
So lots of untapped potential. Which countries are key there?
South Africa is currently the largest market, set to grow from around $30 million to over $150 million.
Okay.
Nigeria is another key player, growing from about $13 million to nearly $65 million. And the rest of Africa, grouped together, shows a strong upward trend too.
So we've circled the globe. APAC fastest, North America largest, Europe steady, South America accelerating, Middle East strategic growth, Africa rising.
Exactly. And what's really striking, if you kind of pull back and look at the big picture again, is just how universal this trend is. It's not just one or two hotspots. Established markets, emerging economies, they're all investing heavily in this technology. It just fundamentally highlights how crucial digital platforms, analytics, sophisticated software, how indispensable they've become for managing wealth everywhere.
It really paints a picture of a global shift. So, okay, we've thrown a lot of numbers out there. Let's bring it home. What does this all mean for you listening? Why should you care about wealth management software?
Well, it's not just abstract billions for banks, right?
Right. It affects things personally. Like maybe your own financial advisor starts using AI tools powered by this software to find investment opportunities tailored just for you.
Exactly. Or the app you use to track your retirement savings. That could become much more sophisticated, much more integrated because of these platforms working behind the scenes.
So it enables new services, maybe more personalization.
Definitely. It creates huge opportunities for innovation.
Yeah.
Think new financial service models. Maybe even changes the skills needed if you work in finance.
There's always a but.
Well, yeah. It also brings challenges, right?
Yeah.
Big questions around data security, how regulators keep up with this pace of change.
And making sure everyone can actually access and use these tools effectively. Digital literacy becomes even more important.
Precisely. Access and understanding.
Okay, so to wrap up this deep dive, the headline is clear. The wealth management software industry is booming globally across every type of market. It's a powerful sign of finance going digital faster and faster.
It really is. And maybe that leaves us with a final thought for you to chew on.
Okay.
Given how fast wealth management is digitizing, what do you think comes next? What are the new frontiers this opens up? Will it genuinely make managing money easier and more accessible for everyone, truly democratizing it?
Or will it create new divides, requiring a whole new level of tech savviness just to keep up?
Exactly. Interesting questions to ponder.
Definitely something to think about. We hope this deep dive has given you a valuable, concise look at this evolving space, more insight than just a quick news hit, and hopefully some useful knowledge about the forces shaping our financial world.
I've been digging into some research on wealth management lately, and it's amazing just how complex it's all become. It's way more than just numbers, right?
Oh, absolutely. It's a constantly moving target.
Exactly. Which makes it, well, perfect for one of our deep dives.
Good choice.
So today, we're really getting into the wealth management software market. It's evolving so fast.
It really is.
Our mission, basically, is to unpack what's driving that growth, look at the challenges, the hurdles it's facing, and maybe the most interesting part, the trends shaping its future.
Sounds great.
And we're basing this on some really solid findings from cognitive market research. They've done some great work here.
Mm-hmm. Good source.
Okay, so let's unpack this.
Let's do it.
First off, looking at what's really pushing this market forward. Our sources point heavily to this huge surge in high net worth individuals. Can you maybe break that down for us? What exactly is an HNWI and where's this growth really exploding?
Yeah, good place to start. So, HNWI, high net worth individual. Typically, that means someone with over $1 million in liquid assets, stuff they can easily invest.
Right, investable assets.
Exactly. And the growth, it's really picking up speed. We're seeing it especially in places like Southeast Asia, India, Latin America, Africa,
Yeah,
key developing regions.
interesting.
And what's key here, I think, is it's not just more wealthy people, but often a different kind of wealthy person, maybe younger, self-made, definitely more tech savvy.
So they expect different things.
Precisely. They demand transparency, real-time access. It shifts the power dynamic a bit. They need sophisticated tools for complex stuff.
Yep.
Global portfolios, international tax, estate planning.
Way beyond just basic stock picking.
Oh, yeah. And that's where the software comes in. It gives them real-time monitoring, performance analysis, tax tools, tailored options, all on their phone or computer.
So it's the sheer number and these changing expectations driving demand for better software.
You got it.
Okay, and the next big driver the research highlights is, unsurprisingly, technology. Technological innovation.
Yeah.
And it sounds like we're not just talking small updates here.
No, definitely not small updates.
Yeah.
It's really a complete overhaul in many ways. We're seeing deep integration of really cutting-edge tech.
Like what specifically?
Well, think artificial intelligence, AI, machine learning, ML, big data analytics, blockchain, even robotic process automation, RPA.
Okay, RPA, how does that fit in?
So RPA uses software bots to handle the repetitive rule-based stuff. Data entry, compliance checks, frees up the human advisors for more strategic work, actually talking to clients.
Makes sense. And the others? AI, big data.
Right, so predictive analytics using AI and big data can forecast market trends by spotting complex patterns, things humans might miss. It's about anticipating, not just reacting.
Moving beyond just looking backwards.
Exactly.
Yeah.
And then you have blockchain for secure transactions. Creates this transparent, unchangeable record. Builds trust and security right into the system.
Wow, so the end result is smarter, more efficient service?
Smarter, more efficient, more personalized. Definitely better client service overall.
Yeah.
And what's fascinating here is this tech is actually starting to make some high-level services more accessible, things that used to be just for the ultra-wealthy.
Really? So it's democratizing it a bit.
Yeah, kind of blurring the lines. Smaller, nimbler firms can potentially compete in ways they just couldn't before. It's shaking things up.
That is a huge shift. Okay, driver number 3, according to the research. Regulatory compliance. Sounds less exciting, but critical.
Huh. Less exciting, maybe, but absolutely critical. And it's a massive push factor for adopting the software. Compliance just isn't optional anymore.
Too complex to handle manually.
Oh, completely. Think about GDPR in Europe,
Uh-huh.
MiFID II, all the anti-money laundering rules, SEC guidelines in the US. The list goes on.
Right.
Trying to manage all that manually, it's impractical, super risky. You need software with built-in tools for automated reporting, data security, risk monitoring. It's essential.
So the software becomes kind of a necessity just to operate legally and safely.
Pretty much. And you see how it all connects, right? More HNWIs, more complex assets, needs more advanced tech, and everything has to follow these strict rules. It's all interconnected.
That really paints the picture.
Yeah.
But okay, growth like this always comes with challenges. The research talks about restraints. High initial setup costs sounds like a big one.
It is definitely a major barrier, especially if you're a smaller firm.
It's not just the software license, is it?
Not at all. You've got the implementation fees, which can be substantial. Then there's training your staff properly on these complex systems. And, crucially, investing heavily in cybersecurity. It all adds up fast.
Yeah, I can see how those upfront costs could be daunting.
For sure.
And even if you find the budget, there's the technical side. Integrating new platforms with, well, sometimes very old existing systems. Is that a headache?
A very common headache, yes. Legacy systems weren't built with today's tech in mind. Getting everything to talk to each other smoothly without losing data or causing disruptions, it's complex, time-consuming, needs careful planning.
Right. Not just plug and play.
Far from it.
Okay, beyond the technical setup. Cybersecurity and data privacy. You mentioned the investment, but this feels like a massive ongoing concern, especially with wealth data.
It's paramount, absolutely top of the list. These platforms hold incredibly sensitive client information, financial details, personal data, strategies.
Making them prime targets.
Exactly. Prime targets for cyber attacks, data breaches, ransomware, you name it. Firms are investing huge amounts in security, encryption, intrusion detection, all that. But the cost and complexity of maintaining that high level of security can still be a barrier to adoption, especially for firms without massive IT budgets. It's a constant battle.
A real catch-22, like you said. Need the tech, but the tech brings risks.
Precisely.
Okay, one last challenge mentioned is more human. The digital divide. How does that play out here?
Ah, yes. That's a really interesting point of friction.
Right.
You've got, on one hand, younger investors. They grew up online. They expect slick digital tools, mobile apps, maybe even robo-advisors.
They're comfortable with it.
Totally. But on the other hand, you have many older clients and, frankly, some traditional advisors who still really value that face-to-face, relationship-based approach.
The personal touch.
Exactly. So you get some resistance to adopting new tech, maybe a lack of digital training for some advisors, and it can slow down how quickly these advanced platforms get fully rolled out and used effectively.
This raises an important question then. How do you bridge that gap? Balance the tech with the human element.
That's the million-dollar question, isn't it? Finding that balance is key.
Absolutely. Okay, despite those hurdles, the future does sound really exciting. Let's pivot to the emerging trends. What's coming next? Hybrid advisory model sounds intriguing.
Yeah, the hybrid model is definitely a big one. It's becoming really dominant, actually.
So what is it exactly?
It's basically blending the best of both worlds. You have human advisors, but they're augmented, supported by AI and sophisticated robo-advisory tools.
So human plus machine.
Exactly. You get the personalized, empathetic touch of a human relationship, which many clients still want, combined with the speed, the data crunching power, and the efficiency of technology.
Makes a lot of sense. Clients get that personal connection, but also the benefits of advanced analytics.
Precisely. It's proving very popular.
Okay, another trend transforming everything. Cloud and SaaS, software as a service. How's that hitting wealth management?
Oh, it's huge. Firms are moving to the cloud really rapidly.
Why the big rush?
Several reasons. It cuts down massively on their own expensive infrastructure costs. It offers much more flexibility. Advisors and clients can access things from anywhere, better accessibility across different devices too.
And probably easier updates and integrations.
Spot on. Cloud solutions make it much easier to plug into the wider fintech ecosystem. Plus, you get regular software updates automatically, so you always have the latest features and security patches without big manual installs.
Streamlines things quite a bit. All right, final trend, and one that feels very current. ESG investing and goal-oriented planning.
Yes, this is really driven by client demand, especially, millennials and Gen Z investors.
Want more than just returns.
Absolutely. They want their investments to align with their values. Environmental, social, governance, ESG factors are becoming really important.
So how are platforms adapting?
Well, modern platforms are now building ESG scoring right in. Rating companies on sustainability, social impact, how they're governed. They're offering filters for socially responsible investments.
Giving clients more control over the impact of their money.
Exactly. And alongside that, much better tools for goal-oriented planning, helping clients map out how to reach specific targets, retirement, saving for college, even planning charitable giving.
Very personalized.
Very. If we connect this to the bigger picture, all these trends, hybrid models, cloud, ESG, goals-based planning, they're really reshaping the industry, moving it towards something more personalized, more values-driven, and frankly, more accessible.
Wow, what an insightful deep dive this has turned out to be. The wealth management software market is clearly incredibly dynamic, constantly changing, no question.
We've seen how that rising demand from HNWIs, especially that newer tech-first generation, plus the huge leaps in technology and those ever-present compliance pressures are really driving
The
things.
key accelerators, for sure.
But yeah, not without bumps in the road. Those high initial costs, the tricky integration with old systems, the constant cybersecurity battle, and that human element, the digital divide. Real challenges.
Definitely hurdles to overcome.
Still, the path forward looks pretty exciting. Hybrid advising seems like a smart balance. Cloud is making everything more efficient. And that focus on ESG and personal goals, that feels like the future.
I think so too.
These insights drawn from that cognitive market research report really highlight this intersection of, well, cutting-edge tech and very personal finance.
So, maybe a final thought for everyone listening. Given all these advancements, this push for investing that's not just profitable, but also personal and aligned with your values, what could this evolving landscape mean for how you think about managing your own financial future, even if you're not an HNWI? Are we moving towards a future where truly sophisticated advice is within reach for more people, or does all this tech just add another layer of complexity we all need to figure out, something to ponder?